Stephen Nash joining us from FIIG Securities now. Stephen, we should start with your take on those FOMC minutes. It didn't seem like very much changed. If anything, perhaps they seemed a little more positive on the US economic outlook.
Yeah, I think there's some slight revisions to near-term growth estimates downwards, but the long-term forecasts are still quite optimistic in our view. It looks like the Fed is trying to stabilise forecasts and not move quickly in terms of changing expectations. It looks like they're estimating a withdrawal of QE and other measures around 2014-15, but I expect that those projections will prove a little bit optimistic and we'll see QE maintained for quite a period of time.
Yeah, absolutely. What about the fact that they took that line out of the statement about global risks this time around? That seemed kind of strange considering the situation we're facing in Cyprus right now.
I think the Fed is really trying to stabilise markets and not add to speculation and confusion with regard to Cyprus at this point. I think obviously the Cyprus situation is a very important one. We'll see later today what actually occurs in Cyprus, but there's probably quite a bit of withdrawal of deposits around Europe, and you're not really seeing evidence of that at this point, and I think the ECB will be providing adequate liquidity to all the European banking system at the moment. So I think the bank run will occur, but it will be a bit of a silent bank run, and you won't really see evidence of that immediately. Longer term, the banks will have funding issues, but the ECB, I imagine, will support them quite well. Yeah,
but for the banks to open back up, we need to find the source of bailout funding. If it's not coming from bank deposits and it's not coming from Russia, where will it come from?
Well, yeah, for the Cyprus banks in particular, very difficult today, but I think more broadly in terms of the European banking system, and that's what the market's really worried about. Liquidity should be adequate. It's really going to be an open question about what happens on the open today with regards to those banks. I imagine there will be delays and continued closure of banks.
Okay, what about in terms of what we heard out of the UK overnight and everything that we saw on the budget front there? Did anything surprise you?
Look, continued revision down in terms of GDP. This has been going on with regard to a lot of economic projections in Europe. We get slightly optimistic forecasts, particularly with regard to the out years, and they keep on getting revised down. Again, that occurred in the UK budget. Growth looking closer and closer towards zero. Obviously not projecting a recession at this point, but getting very close to that with that 0.6 estimate for GDP growth in 2013. So again, the UK getting very close to zero growth.
Okay, I also want to ask you about Obama's trip to Israel. We still see the tensions between Israel and Iran as a major threat this year. Why did the president make the trip?
I think that this is a really important trip by Obama. Obviously, there's many things that are going on in the US at the moment, and he'd most probably prefer to stay at the US or in the US at this point, but these concerns of Israel with regard to Iran are quite serious. We've had the recent Syrian chemical weapon notification as well. So I think Israel is really getting concerned about both the Syrian war and also the Iranian situation. And Obama's over there to really try to calm down the Israelis and hopefully avoid a conflict with Iran, because if that was to occur, we'd see oil prices spike towards the $150 level. Now, at the moment, we've got the sequester fiscal drag starting to impact the US, and a high oil price would really delay recovery or possibly force the US back into recession. So this is just not right timing for any aggression in Iran at this point.
Okay, Stephen, thanks so much. Appreciate the chat.
Thank you very much.